Hello, everybody. Welcome back to Strongman Personal Finance. It's my lunch break. It's actually nice to telework for once. Anyway, we got to talk about a very interesting development in the world of grifting and Cathie Wood. If you don't know who Cathie Wood is, she's a fund manager. She runs multiple ETFs that buy a bunch of clown stocks. If you don't like what I have to say about that, you can lick my nays, okay? Now, apparently, Cathie Wood is moving on to her new grift because what I think is happening is she's having a lot of issues making money on her current ETFs because they are down in the toilet. Her ETFs have been absolutely wrecked, and her fee, her expense ratio that she charges on those ETFs is based on a percentage of assets. And if you ain't making money on your ETFs, well, you got to launch something new to make even more money and grift even harder. Now, this new venture capital fund that Cathie Wood has set up through Titan Investment is a massive grift. It is a cash grab, okay? It is nothing more than that. So what we're going to do is we're going to listen to Cathie Wood explain it in her own words, and then I'm going to give you my thoughts on how much of a freaking disgusting grift this is. Because at the end of the day, I'm a hero protecting you from scumbags and losers like Cathie Wood. Let's watch.
Welcome to the ARK Venture Fund, exclusively on Titan. With ARK Venture, you'll have your capital invested in some of the most disruptive and innovative companies operating today, from seed stage upstarts to publicly listed giants. Our job is to identify the next Facebook, the next Uber, the next Airbnb. Are you ready to invest in venture capital? Okay, let's get started.
Isn't that wonderful, ladies and gentlemen? And we'll go read about it more in a second. But basically, you get access to venture capital. You can invest in potentially private companies that the average investor can't invest in. Isn't that a great deal? I mean, who wouldn't want to buy the next Facebook? You get like 1,000x your money. Well, at the end of the day, no matter what happens, Cathie Wood wins. And if you lose, oh well. So let's go read more about what this is all about. So, like she said, you can invest in innovative and disruptive companies. Remember how that turned out in the last clown market? Let's read. The ARK Venture Fund seeks to democratize venture capital. Whenever you hear the word democratize, it's probably a scam, okay? Robinhood democratized investing. I disagree. You know what actually democratized investing? Index funds. We'll get into that later. Offering all investors access to the most innovative, whenever you see innovative and disruption, it's probably a scam, companies throughout their private and public market life cycle. Through its open research process, and remember, ARK's research process is a joke. She hires a bunch of like clowns that think Tesla's intrinsic value is probably in the multi-trillions. And their assessments of Tesla includes a lot of things that haven't even come to be yet, like robo-taxis, blah, 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 blah. There are a bunch of clowns making up numbers. ARK seeks to identify companies that are leading and benefiting from cross-sector innovations, such as AI, robotics, energy storage, DNA sequencing, and blockchain technology. I mean, don't you already get most of this in her stupid little ETFs? But of course, she's going to invest in very small private companies. And remember, a very small private company is insanely risky. Insanely risky. I could have a small private company. I can hire my neighbor. We can go rent a freaking shack somewhere, make out a little bit, and then we could, go work on DNA or something. DNA. So here's some of the key facts. And this is just so gross. Your minimum investment is $500. So most people can afford to do this. And she's using her name to attract investors, like very inexperienced investors. Because like an actual hedge fund or an accredited investor probably isn't going to invest in this crap. They're probably going to use alternative means. So this minimum investment is attracting the average Joe that just gets sucked away and sucked in by disruptive innovation, 10x, next Facebook, blah, 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 blah. Liquidity. This is very key. And they go into more detail later. But if once you put your money into this, it's basically locked away. Now, you can take some money out every once in a while, but you put the money in, doesn't matter how trash the returns are, you can't sell out of it. Contrast that to an ARK ETF. An ARK ETF, it's garbage. It's a trash ETF. Any one of the ETFs are all freaking worthless trash. You can sell it on the market whenever you freaking want. Not so with this. Targeted number of public companies. So they're buying publicly traded companies. Okay, you can do that yourself. Well, if you want to invest in disruptive innovation, you want to be an individual stock picker, you want to be an active investor, pick your own freaking stocks, okay? If you want to be an index fund investor, then you can buy the index. Targeted number of private companies, 25 plus. I don't know, does the plus mean 1,000, 10,000? I don't know. Investment horizon, 5 to 10 years. Now, that's the long-term investment grift. And let's not confuse that with my long-term investment grift. For her grift, she has a horizon of 5 to 10 years. So she can justify any amount of losses that the fund suffers because it's 5 years. I'm looking 5 years down the road. It's just like Lafufu. She gives you promises. You can find the next Facebook, the next this, the next that. And even if the stock gets crushed 90% and you buy a bunch of unprofitable share diluting trash, it doesn't matter because in 5 years, it'll go up. And guess what? Over the 5 year to 10-year time horizon, she's making money. And remember, you'll see the expense ratio right here. She's locked your money away and she's charging you the expense ratio and you can't really get out of it. So no matter what, you put your money in this, she's going to make a fortune, okay? Unlike ARK ETF, where if you don't like it, you can sell it and not pay her the expense ratio. She is guaranteeing herself money for a long period of time. Well, I guess performance does matter because it's a percentage of assets, but she's guaranteeing herself money for a long time. Look at the management fee. 2.75%. Oh, oh God. That's almost 4 times as much as her ARK ETFs. And that's probably 1,000 times more than what a normal index fund will charge you, or infinitely times more than some index funds charge you, like the Fidelity index funds that have no fees, no management fees. 2.75% is a criminal grift. Oh, but there's more. It's not just 2.75, but I'm just a jerk. I don't have a shirt on. My hair is jacked up. I don't have a lot of subscribers. I'm not a millionaire. Why would you listen to me when Cathie Wood is all the above? I love it. I love it. In addition to the manager fee, clients are charged for certain other fund-related expenses, including organizational and offering costs. For example, in the 12-month period beginning in August 22, in addition to the manager fee, other expenses include a distribution and or servicing fee of 0.65% and one-time organizational costs and estimated other operating expenses of 0.82%. Assuming assets of $250 million for the first year, resulting in total anticipated fund expenses of 4.22%. Now, if a bunch of clowns throw their money in here and they raise more than $250 million, okay, some of those percentages will decrease, but the management fee itself is fixed 2.75%. That's the minimum you will pay. And on top of that, you're going to pay these high distribution and operating expenses fees. And if they raise fewer money than $250 million, that fee is going to be higher. Oh my God. This is criminal. 4.22% and more potentially. But it's Cathie Wood. Yeah. With the ARK Venture Fund, we aim to provide all investors accredited and non-accredited, access to a traditionally exclusive private asset class. We're democratizing investing. Pay me 4.22%, bro. So here's the thesis. All right. Access for all retail investors. Massive scam. Cost-effective alternative. Cost-effective alternative. VT is 0.07. 0.07. VTI is 0.03. Fidelity index funds, some of them are 0. 2.75 is cost-effective. Oh, I guess it's cost-effective compared to traditional venture capital. And then, of course, liquidity, a little liquidity for an illiquid asset class. ARK aims to offer more cost-effective liquidity to venture capital by offering an evergreen public-private crossover that allows for quarterly redemptions. Now, if you put your money in here, she's getting 4.22% per year. And if you don't like it, if you regret your decision, you could do quarterly redemptions of 5% of net asset value. So it seems like you could pull out 20% of your money per year. So you could take, in 5 years, you could pull out all of your money. Oh, this is gross. This is gross. So I don't even know what to say. Let's see how much she could possibly make off of this. All right, let's say there's $250 million of assets, and she's charging the 0.42%. And let's just say the fund stays at $250 million, because I can't tell you what the assets are actually worth. She's going to make $10.5 million per year. Per year. Oh, God. You know what? I surrender. I surrender. I'm an idiot. All I do is point out the truth. But I don't have a nice haircut. I don't have a shirt on. I'm a loser. Cathie Wood's a millionaire, bro. The Fufu's a millionaire, bro. Oh, my God. God, you people in your comments. Strongman can't even talk about Cathie Wood without defending Kevin. This is actually a clever way to get more views on the video. 2.75% for a bad investment manager. I mean, even if you're a great investment manager, holy freaking crap. I would rather invest in Strongman. I need to offer Strongman stock, man. You can get like partial ownership of my YouTube channel. Yeah. Just buy my stock, bro. VT my ET. How much do you charge? More than you can afford. It's interesting to see that as soon as Jeremy said Apple is a potential buy, the next day Apple was down 5%. That man is a returns bogeyman. Oh, Jeremy. And he talks about Cathie Wood all the time. Of course he does. Oh, it's 5 years in the future. So it doesn't matter how much my stocks go down because they're going to 10x my index in 5 years. Everything he touches, you should stay far away from. The day he buys VT is the day I'm liquidating. Nominal return for stock market around 10%. Subtract 4.2 gives us 5.8%. Subtract 3% inflation gives us 2.8% annual returns if she matches the market. But Cole, she's a millionaire and you're not. So you're wrong. Thank you. Bye. The same with Cappy. Will she buy shares of Smile Direct Club? Wouldn't surprise me. Buy my curse, bro. No, not trash enough of hers. Smile Direct Club sells at $1. She would find a company like Smile Direct Club that sells for $10. I trust Cathie Wood. She told me to put $35K on Tesla, and I'm a millionaire now. That's the only thing holding this lady up. I don't want to say the other word. Bussy boy. Don't surrender, strong man. There's too much grifting out there. I'm just kidding. I'm not going anywhere. I make too much grift money from my ad revenue on YouTube. Anyway, that's it. I just wanted to highlight the degeneracy of this new investment where your money gets locked away. You can't really take it out. It takes a long time to get your money out. And the whole time she's raking in those fees and losing you money on top of that. That's it, guys. Hope you have a wonderful day. Cheers.